Right, so I just got back from work. My voice is a little bit hoarse. I'm just getting well soon from the sore throat and such. But anyway, let's talk about the FOMC meeting today. I want to keep it kind of brief. Okay, so if you probably already came from my Instagram page, you probably already saw like a brief summary of the whole entire FOMC summary. I kind of just put it into words and then I just uploaded into about like 2 to 3 stories on my Instagram page. If you're not following me on Instagram, link down below. Just go and click it, find it yourself. Okay, by the way. Let's talk about FOMC, okay? After yesterday, when they dropped the 25 basis point increment, which basically was a shoe-in expectation alongside with everyone's expectation, okay? No one was really expecting a 50 basis point increment. No one was really expecting a pause. Maybe some people was expecting a pause. Jerome Powell took the stage and gave us basically non-stop good news. Okay, so if you know historically, in the past 2 years, that hasn't really been the case, because whenever Jerome Powell talked for extended period of time, we usually see extended period of red candles. Okay, so as much as how the Feds kind of intends to want to stand in the hawkish camp, trying to tell us, we need more data, we need to ensure that inflation is not sticky, we need to ensure that labor market starts to wear off a little bit, things like that. The action and the tone that they actually have, that they are actually starting to use are kind of in the opposite direction at the moment. So a question that was being asked during the Q&A was actually asking regarding a pause, okay? Asking if a pause was considered for this current FOMC meeting. Okay, the fact that Jerome Powell said that, this meeting actually considered a pause. This meeting considered a pause. Think about it this way. It's going to be huge. Okay, you think about it. In the next month, we are probably going to be getting the FOMC minutes for this current meeting. It's going to be crazy, because if that minutes comes out and then afterwards inside, people are actually having heavy debates on wanting a pause, you can see that the market is going to spike up again. Okay, because if a lot of the Fed's official thinks that a pause is a lot better than a 25 basis point increment, you can see why that would be actually bullish for the market. Okay. But according to the SCP that we actually had in December of 2022, actually projecting for 2023, it actually showed that for 2023, we're not actually going to be getting any sort of a pause, okay? Because it's most likely going to be a 25 basis point increment hike for every single meeting, and that's just about it. Okay, that was kind of what we kind of expected from the last SCP. Okay, and honestly, I kind of expected Jerome Powell to just be like, just look at the last SCP. We basically have all the information, and whatever we are thinking about is according to the last SCP. I thought that that's what Jerome Powell would mainly just do. Although he did do a lot of referring back to the SCP, but he kind of added a lot of additional notes on his own. So one of the notes that I do want to quote over here, which is disinflation process has started. Okay, so this is a huge news. Okay, for people who don't understand the difference between deflation and disinflation. So for deflation, basically it's talking about inflation basically going to negative. So you're talking about like actually having negative inflation. Disinflation is a dropping of inflation. So for example, you have been getting like 9% inflation year over year. Now you're getting like 5%. Okay, that's a huge disinflation. Whereas if you have 9% inflation and then the next year you got like negative 4% inflation, that's called a deflation. Okay, so we're starting to see a disinflation process starting, according to Jerome Powell. Okay, and I think this is huge news, because the Feds usually are not really the ones that want to recognize the fact that inflation wasn't really under control to begin with. So this is basically the first time the Feds actually come out to recognize and say that, I think all the tightening that we have actually been doing is actually starting to work out. Okay, we're starting to see the fruits of our labor is starting to work out. Disinflation is starting to happen. Okay. Although I also I want to say that for the Feds themselves, they also talk about how they do not want to cut rates too early. Okay, because of course when we're talking about pause, we're talking about cuts as well. Okay, and I think this is a very, very fair point. Okay, they don't want to cut the rates very soon, is because what would actually possibly happen is that they might actually end up having to cut way too early and then having to raise it back again. So for example, let's just say in this meeting, hypothetically speaking, let's just say we had a 25 basis point cut, okay, where we actually go down in our interest rate. And then for the following 3 months of inflation report, we actually get high inflation again. Then they have to hike it back up to like 75 basis point increment or even 100 basis point increment because they realize, oh no, we messed up. We cut it down way too early. We need to hike it back up. And there's going to be a lot of this kind of reversal sort of reaction. And I think that's what the Feds do not want to see. And because of that, I feel that they possibly just want to keep it at a 25 basis point increment where they can easily and more accurately cut and raise accordingly. So I think that it's pretty good. I think that they actually did a very, very good job about it. Alright, then afterwards, the Feds also talked about how they require more data for them to actually act accordingly. Okay, so this is actually referring to the next FOMC meeting, which is not going to be for the whole of February. I think it's going to be for March. I think the last week of March. I think it's the 22nd of March. We're going to be getting the next FOMC. And that's also where we will be getting the SEP for that quarter. Okay, that's going to be very, very interesting. Okay, there's going to be two things that we're going to look out for, which is the SEP. We're going to look at how they are looking for FFR rate, which is your federal funds rate. We're going to see what's your terminal funds rate. We're going to see what are their projection for the end of 2023. Is that going to be going down? Because if that's going to be going down, it means that we are most likely going to be seeing a rates cut. Okay, if it's going down by a little bit, a rates pause is definitely going to be very, very well seeded in the second half of 2023. Okay, so, but it's kind of funny because when Jerome Powell wants to say the words, but whatever the words that Jerome Powell said, it did not really reflect the facial expression that he really had. Okay, because Jerome Powell just refuses to use the word cut. And I can understand why. I'm pretty sure that the entire Federal Reserve meeting, they probably had this media training where it's like, okay, you know what, Jerome Powell, when you go out there, you're not allowed to use the word cut because we do not want to suddenly just make the whole market rally and then inflation is going to come back again. Okay, so because of that, okay, he was trying really, really hard, okay, to stay in the hawkish camp, and he was like saying, yeah, you know, things can get worse, and if it does, the SEP will be adjusted upwards. Okay, then of course afterwards, then he kind of just came in and just said, yeah, but of course, if the data that we get is also improving, if it gets better, then we'll do the actions accordingly. Which is cut. Come on, Jerome Powell, just give us the word. Just say cut. Okay? So, I mean, it doesn't really matter because the whole entire market sentiment, we get where Jerome Powell is coming from. We get what he's trying to say. Okay, but then after that, other than that, I think Jerome Powell also basically touched upon wage price spiral, which is a question that was asked in the panel as well, which basically got debunked immediately because wage price spiral requires the constant belief that we have this persistent hyperinflation going on in the economy, which clearly with the absence of that, that's basically what the Feds are actually thinking, and the Feds are not exactly worried about it anymore. Okay, so that's not even a concern to the Feds anymore. So I think overall, really, really good meeting over here. I'm a big fan of it. I also covered my shorts on Tesla as it is, but you do not know, I might also open up shorts on Tesla again if it actually goes up to ridiculous high levels again. I don't know how, I will see how it actually goes, but yeah, I really love this meeting a lot. And honestly, I'm not sure. I think that it's the first time we actually saw Jerome Powell kind of smile a little during the meeting as well. Okay, Jerome Powell hasn't really been smiling in the past 10 meetings, and also he has always been a little bit sad, grumpy, and things like that. But it's kind of nice to see that one person even greeted him, how are you today and things like that, and then he was even laughing and such, and that's pretty cool. So yeah, I'm a big fan of this FOMC meeting. But that's all I have for this summary. Thank you so much for watching. I'll see you guys in the next one. Bye.